Most investors spend their time trying to predict the future. Which AI company will win? Which robotics company will become dominant? Which data center technology will take over? Which military drone company will change warfare forever? But there's another way to invest in technological revolutions. Instead of trying to predict who wins, ask a different question. Who gets paid no matter who wins? That's how investors can really make a windfall of profit, because every technological revolution has a hidden layer underneath it. The computers need connections. The robots, they need sensors. The data centers, they need high-speed cable. The drones and the aircraft need rugged electronics. Military systems need components that can survive environments where ordinary electronics would fail. And buried underneath all of these enormous trends is a company most people have probably never thought about: Amphenol. It doesn't build the AI model. It doesn't build the robot. It doesn't build the fighter jet. It doesn't build the drone. But it builds many of the things that allow those machines to actually communicate, move, information, and function. And this creates a fascinating possibility for investors who are paying attention. What if one of the best ways to invest in the future isn't to predict which technology wins, but to own the company supplying the infrastructure that every version of the future needs? But there's a problem, because being exposed to a great trend doesn't automatically make you a great investor, and it doesn't automatically make for a great investment. So today we're going to try to find out, is Amphenol simply riding the AI boom, or has it quietly become the toll booth on the technological future? Here's the investing lesson. Don't predict the future. Find the businesses that the future depends on. See, this isn't really a story about Amphenol. It's a story about one of the hardest problems in investing. How do you invest in a technological revolution without having to predict which technology or which company wins? Think about the history of technology. The world has seen countless technological revolutions. Some companies, well, they became giants. Others completely disappeared, bankrupting investors. Some technologies became dominant. Others became historical footnotes. And investors who correctly identified the trend could still lose a boatload of money if they picked the wrong company. That's the trap. You can be completely right about the future and completely wrong about the investment. But imagine finding a business where multiple possible futures actually work in your favor. AI grows, robotics grows, defense spending grows, data center infrastructure grows, high-speed computing grows, humanoid robots grow. And instead of needing one specific technology to win, there's a company that sells something that all of these technologies need. This is one of the most powerful ideas in investing. And that is, you don't always need to predict the future. You don't always need to predict the winner if you can own something every winner needs. But that's the theory. Now we need to find out whether Amphenol actually works that way. Let's imagine something. It's 5 years from now. AI didn't disappear. Instead, computing became dramatically more powerful. Data centers became enormous. Companies deployed AI agents everywhere. Robots, they became increasingly capable. And humanoid robots, they moved from laboratories into factories and maybe even into your home. Military drones became more sophisticated. Aircrafts became more electronically complex. And all of these machines, they have something in common. They need to move enormous amounts of information. So they need to connect sensors. They need to connect processors. They need to connect power. They need components that can survive increasingly demanding environments. Now imagine Amphenol sitting underneath all of that, not as the company everyone talks about, but as the company supplying the connectivity tissue. That's the possibility. It's almost like selling the shovels during a gold rush. You don't need to know which miner finds the gold. You just need enough miners to keep digging and buying shovels. But, of course, that's the dream. And investors have been fooled by dreams before. So let's put the dream aside for a moment. What does Amphenol actually do? Imagine you're taking apart a modern piece of technology. The data center, a military drone, a self-driving car, a satellite, communication systems, a robot. You'll see processors, you'll see batteries, you'll see sensors, you'll see wires, you'll see connectors. You might see sophisticated software. But underneath all of this is a much less glamorous problem. Everything needs these connectors to connect to everything else. The electricity has to move, the data has to move, the signals have to move, the sensors have to communicate with the processors. And all those connections have to work reliable. And that's Amphenol's world. The company makes connectors, high-speed cables, sensors, and other electronic components. It operates in areas ranging from technology and data centers to aerospace, defense, automotive, and industrial markets. And here's what makes the story interesting. These aren't necessarily components consumers think about. Nobody buys a smartphone because of its connectors. Nobody watches a Super Bowl commercial without a high-speed cable. But without the underlying connections, the technology doesn't work. Think about the human body. The brain may be incredibly sophisticated, but without the nerves connecting the brain to the rest of the body, well, the brain isn't very useful. And Amphenol is part of the nervous system of modern technology. Take a look at all the products Amphenol sells. They sell connectors, cable assemblies, sensors, antenna solutions, power distribution, just the raw cable, printed circuits, and other accessories, all for the technologies of tomorrow. Suddenly, this business starts looking very different because perhaps Amphenol isn't really a company just selling connectors. Perhaps something more interesting is happening. It's becoming a supplier to the physical infrastructure. Suddenly, the business is starting to look different because perhaps Amphenol isn't really a company selling connectors. Perhaps something more interesting is happening. It's becoming a supplier to the physical infrastructure underneath technological progress itself. Now, let's look at the strongest possible case, because if the future we're imagining happens, Amphenol could be in a remarkably attractive position. Let's talk about the first windfall possibility that could make investors a ton of money. AI. AI requires enormous computing infrastructure, and computing infrastructure requires connections capable of moving increasingly large amounts of data at increasingly high speeds. The more complicated the data center becomes, the more complicated the physical infrastructure underneath it becomes. And that's where Amphenol can participate. AI may be the software at the surface, but underneath it is an enormous physical machine. And the connections are built by Amphenol. Let's talk about windfall possibility number 2. Another possibility that could set investors up for windfalls of profit, and that's robotics. Now, take the same idea and let's apply it to robotics. A humanoid robot isn't simply a machine with a battery and an AI model. It has sensors, motors, cameras, processors, actuators, power systems. Every one of those systems has to communicate. And as robots become more sophisticated, the number and complexity of those connections can increase. Imagine going from a machine with a few moving parts to a machine attempting to replicate the physical capabilities of a human being. That's an enormous increase in electronic complexity. And Amphenol doesn't need to know which humanoid robot wins. It doesn't matter if it's Neo. It doesn't matter if it's the Tesla bot. It doesn't matter what company comes up with the next robot. It just needs the industry to keep building increasingly sophisticated robots. And Amphenol is set to profit. So let's talk about windfall possibility number 3. This is another windfall possibility for investors. Defense spending. Everyone knows the tensions are heating up. All you have to do is turn on the news. And now the story will get even more interesting. Because defense, well, that's a sector that failure, it isn't an option. And a connector inside a consumer device, well, that can fail and someone gets a replacement. But a connector in a military drone operating in extreme conditions, this is a completely different problem. That creates a market where reliability matters enormously. The more sophisticated military systems become, the more electronics they require. Think about all the drones you hear about in the news. The aircraft, the communications, the sensors, the radar, electronic warfare, military drones, and humanoid military robots. All of those systems are going to need components that can survive harsh environments. Just imagine building a house. A normal house can use ordinary materials, but if you're building a bunker that's built to withstand a nuclear blast, suddenly the quality of every component and who manufactures it matters. That's the kind of environment where specialized suppliers like Amphenol can become extremely valuable. Now, connect all those emerging technologies, AI, robotics, defense, data centers, and these look like completely different industries, but underneath them is the same physical problem. How do you reliably move power and information inside increasingly sophisticated machines? And that creates the possibility that can set investors up to become fabulously wealthy. And Amphenol, well, it's positioned for it. Now, Amphenol doesn't have to predict which technological revolution wins, or even which company wins at the next big thing. But it can participate when any one of these things happens and any one of the companies wins. See, the technology changes, the need to connect it doesn't. And at this point, the story about Amphenol starts to get exciting because you can only begin to imagine why a company like this could quietly compound for a very long time. But this is exactly where we need to slow down because investors have made this mistake before. Being exposed to AI isn't enough. Being exposed to robotics isn't enough. You could own a company sitting directly in the middle of a massive technological revolution and still make a terrible investment. Why? Because there's a huge difference between being in a great industry and being a great business. And there's another difference in between being a great business and being a great investment at today's price. So now I'm going to forget about AI, forget about robotics, and forget about the drones. Forget about this exciting story and ask a few questions that Warren Buffett would ask before he invests in a company. The first question is Amphenol a wonderful business? This, I think, is one of the most important questions. And I think the interesting thing about Amphenol is that its potential moat isn't based on consumers loving the brand. It's based on something much less glamorous. Engineering relationships, reliability, specialization, and integration into customers' systems. See, once a component becomes part of a sophisticated product, especially if a component is relatively small and not incredibly expensive, switching suppliers isn't always as simple as just changing a brand's toothpaste. See, the customer may need to redesign the system, retest it, requalify it, make sure it survives the environment, and make sure it performs at the required speed. And make sure the entire system continues to work. That creates friction, and friction can become a powerful moat. Imagine you're building a skyscraper. Once the building is finished, you don't casually replace the bolts holding the structure together just because you need a new bolt and one costs a little more. See, these boring components become extremely important precisely because they're buried inside something much more valuable. But here's the important question. How durable is that advantage? Could customers increasingly commoditize connectors? Could competitors offer comparable products? Could technological changes make Amphenol's existing expertise less valuable? That's what could permanently damage the moat. Now, the best suppliers aren't necessarily the most famous. They're the ones customers don't want to replace. Amphenol was founded in 1932 too. So it certainly has stood the test of time and has continued to grow and expand. It's looking like a pretty wonderful business. Let's move on to the second question. Does this business have great long-term prospects? Now, we're leaving today's business behind. The real question becomes, does the world need more of what Amphenol is good at? There are several possibilities working in its favor. Technology is becoming more interconnected. Compute, well, it's becoming more powerful. AI infrastructure is becoming more and more complex. In robotics, well, they can become more sophisticated. You're watching it in front of your eyes. Just turn on YouTube and look up some of the channels and what the future is bringing. Military systems, they're becoming increasingly electronic. And all of these trends potentially increase the importance of physical connectivity. But of course, there's a danger. This thesis cannot simply be technology will grow. Technology has grown for decades. The real question is, does increasing technological complexity create an expanding opportunity for Amphenol specifically? That's a much harder question. The one question that matters the most is, as technology becomes more complex, does Amphenol's economic importance grow faster than the cost of competing with it? If yes, the moat could strengthen. If no, then the incredible future we're imagining as potential investors may not translate into incredible shareholder returns. Amphenol has many potential bright futures, which is why I think it could have amazing future prospects. AI, robotics, self-driving, drone warfare, humanoid robots, all of the next potential technologies look like they will require more and more connectors, making Amphenol in a unique position to potentially profit if just one of these technologies become the next big thing. So let's move on to question number 3. Can I buy this business at a wonderful price or a fair price? Now, we arrive at the part investors don't like to talk about when they fall in love with a company, the price, because the future could be enormous and the investment could still be mediocre or even bad. Imagine if someone tells you, I found the greatest building in the city. You investigate. It's beautiful. It's profitable. Everyone wants to rent space there. It has a great location. You agree. It's a wonderful building. And then they tell you, I'll sell it to you for 10 times what it's worth. Suddenly, the quality of the building doesn't really matter nearly as much. The same principle applies to stocks. The question isn't simply, is Amphenol a great company? It's how much of that greatness am I already paying for? Right now, as I'm recording this, Amphenol is trading at 42 times earnings. So let's go look at what the analysts are expecting it to grow. So the analysts are expecting it to grow 53% sales growth this year. This is with 15 different analysts. And you know what? That is very exciting. What about next year? So down here are their growth estimates. The current year is as high as 59%. Next year, 21%. So the price that I'm paying for this growth is less than 1. If I look at the ratio, it's 0.6 today. And historically, it has been way less and way more. So maybe that's a fair price if all of the growth comes to be. Now, paying anywhere around a peg of 1 is usually a fantastic deal if you're buying a great company and the growth happens. What investors never want to do is pay way too much and then the growth doesn't appear. But this doesn't seem too expensive. It also doesn't seem blindingly cheap. It seems very fair. Of course, if investors already expect years of AI growth, continued robotics growth, continued defense spending, and continued margin strength, and continued execution, then some of that future may already be reflected in the price. But that doesn't mean the company isn't wonderful. It means that the investment has less room for disappointment. So, a wonderful business can produce mediocre investments if you pay a wonderful price for that business. Now, given the data, I'd like to buy Amphenol at a cheaper price, obviously, but I also don't think the current price is wildly expensive if we really do end up with the type of technologies and the growth that analysts see developing and that I see developing. I don't need to be a Wall Street analyst to see the growth. So, let's get to the million-dollar question. We've now come full circle. There's a lot of possibility. AI, humanoid robotics, drone warfare, a world becoming increasingly dependent on electronics, and Amphenol sitting underneath it all. We've established that the company may have real competitive advantages. We've looked at its long-term opportunity, and I think it could be substantial if things play out the way we think they could. And we've established that even a wonderful business can disappoint shareholders if expectations get too high. So here's the question I think ultimately determines the entire investment. Is Amphenol simply benefiting from the technologies of today, or has it become a critical toll booth on the technologies of tomorrow? Because those are two very different investments. If it's simply an AI beneficiary, eventually the AI cycle could slow. But if Amphenol has become increasingly embedded in the infrastructure required for AI, robotics, self-driving cars, drone warfare, and the next generation of computing, then the story becomes much bigger. And that's the question, as an investor, I would want to answer before putting serious money into this company. Perhaps the bet isn't that Amphenol becomes the next AI winner. Perhaps the bet is that technological complexity itself becomes the growth engine. AI could be one chapter, robotics another, drone warfare another, self-driving cars another, humanoid robots the massive, most biggest opportunity of them all. And whatever comes next may create more and more demand for increasingly sophisticated connectivity. And Amphenol is in the position to potentially profit. Maybe the opportunity isn't betting on the next technology. Maybe it's betting that technology will keep becoming more complicated. That is a much more durable thesis. Here's where I would land. I don't want to own Amphenol simply because AI is growing. That's not enough. If I want to own it, I have to believe three things. First, the company has a durable advantage that keeps customers coming back. Second, increasing technology complexity expands more of the company's opportunity over time. And third, the price doesn't already assume too much of that future. It's not the most glamorous stock and everyone hasn't heard of it. So if I had to guess, maybe that's true. It's impossible to know. And that's the entire investment. The bull case is compelling. But the biggest risk isn't necessarily that AI disappears. The bigger risk is paying too much for a company whose future is already widely understood. What would make me more confident in this investment? I'd want to see continued evidence that Amphenol is gaining share in important growth markets. It's making many acquisitions and they're looking good. I want to see that customers increasingly depend on its specialized products. We'll have to wait and see as these new products come out. Now, next, new technologies, they create additional opportunities for Amphenol rather than simply replacing the existing ones. The company, I want to see it continue to turn growth into attractive economics. The valuation leaves enough rooms for things to go wrong if it actually delivers on this year's growth. If it doesn't, well then I think investors will be disappointed. The only way to know for sure is to travel to the future, so we won't know for 100% sure. Now, what could change my mind? If the company became increasingly commoditized, if customers gained the ability to easily switch suppliers, if technological changes reduced the importance of its products, or if the valuation became disconnected from reasonable expectations. I don't think it's doing that right now when it's anywhere near a peg of 1 or less. If it was like a peg of 10, yeah, it would be pretty hyped and disconnected. And then the thesis would weaken. Now, This is potentially attractive for an investor who wants exposure to technological progress without having to pick the ultimate AI winner or the ultimate robotics or defense winner. But it may be less attractive for someone looking for a deep value opportunity where pessimism is already in the price. There's certainly not a lot of pessimism here. Now, because the question isn't whether Amphenol is interesting, it's whether the quality of the business is high enough to justify what investors are paying for it. Now, we've investigated the business. There's one more question I'd like to ask. How would a great investor think about an opportunity like this? That's exactly why I created the Billionaire Portfolio Tracker, to see where billionaires are moving their money, so I can find the best stock to buy now. So if you want to check that out, click over to my channel page and follow the link to check it out, or go to the billionaireportfoliotracker.com if you want to find the best stock to buy now and see where billionaires are moving their money. What I've learned today researching Amphenol is when technological revolution arrives, most investors immediately ask who's going to win. But sometimes there's a better question. What does every winner need to have? Because predicting the winner is hard. Finding the infrastructure underneath the entire game can be much easier. That's why you've seen cloud producers like Microsoft, Google, and Amazon make huge gains over the last decades. Or the last decade, last 15 years, because they were providing the infrastructure for the whole internet. Is Amphenol going to provide the infrastructure for physical AI and robotics? They're set up to do it. Will they do it? Only time will tell. Now, this is one of my favorite investing principles I've learned by studying billionaire investors. Don't always bet on the horse. Sometimes own the racetrack. But there's one important qualification. The racetrack still has to be a good business, and you still have to pay a reasonable price for it. That's what makes investing difficult. We started this investigation with a possibility, a future filled with AI, robotics, autonomous systems, drones, advanced defense technology. And we found a relatively quiet company sitting underneath many of those technologies. That company is Amphenol. We don't know exactly what the future will look like, and that's the point. But because maybe the smartest investments aren't always the companies that successfully predict the future. Sometimes they're the companies that quietly provide something the future can't function without. But before you buy one of those companies, there's always one final question. Is the business truly exceptional? Are its prospects truly durable? And are you paying a price that gives you room to be wrong? Because the future can be enormous, the investment can still be terrible if you buy it at the wrong price. So the job isn't to predict the future perfectly. It's to find what business can prosper across many future possibilities, and then have the discipline to pay a sensible price. Amphenol looks like it could fit that bill. Now, you'll have to decide for yourself. You won't know exactly what the future looks like, and you just have to own something valuable enough to survive that uncertainty. If you want to find the next stock to buy now, hit that like button, click over to my channel, hit the subscribe button, and follow my link over to the Billionaire Portfolio Tracker to find where billionaire investors are moving their money. I'll see you in the next video.